Hey guys, today we're going to talk all about life insurance. But if this is your first time joining us, welcome. My name is Michael Foley. I'm a certified financial planner and student loan professional, and I'm also the son of two doctors and really design lifestyle creep to help healthcare workers and our families to really be more intentional in their finances and really simplify this complex system of finances and hopefully inspire you to live more humble and quiet lives throughout the process. So thanks so much for joining, and let's dive in. So one of the big questions that we always get is, how much life insurance do I need? What types of life insurance are out there? And, I think one of the biggest questions that we got to really break down is, where does it fit into the plan, right? So as a planner first, we're always going to look at, not just getting insurances to get insurances, right? We want to make sure that it has a place and a purpose in our financial plan, because if we're spending hard-earned dollars on an insurance, that we gotta know where does that fit into the plan. It might be a good product in and of itself, but if we don't have a need for it in the plan, then why are we paying for it, right? And so that's something we really got to make sure that we know where it fits in. So I got my fancy graph here for you that I'm gonna walk you through, but this helps us to kind of depict what are the needs throughout our lifetime for how much life insurance that we need. And then towards the end of the video, we'll break down the two different types of life insurance and some ins and outs of those, okay? So just to familiarize you with the graph here, so time is our x-axis here, amount of life insurance is our y-axis, okay? So let's kind of walk through kind of a conventional client situation that we see, right? So if this is pretty much where our folks are at when they're first single, they don't have any dependence upon them financially. So if they were to pass away prematurely, there wouldn't be a financial loss for someone else that's depending on them being there for them, right? So there's really not a need for life insurance at that point. But then this is, maybe when our clients get married. And so now the clients are married and now they're joining finances and becoming more interdependent. Maybe they buy a house with their spouse, or now there's more of a need to help fill the void for the spouse if there was a premature death. So there's a little bit more of a life insurance need at that point, right? But then this is where my wife and I are at, right? This is what we call the peak of the coaster. This is the highest need of life insurance that you're ever going to have through your life. And that's when you have little ones. You got kiddos at home. Their every want, need, and desire is yours to provide. And so really important that we have that amount of coverage at the peak, right? But then, God willing, they'll become self-sufficient. And usually around this point is when our clients become empty nesters. And so that's where kids are off payroll, if you will, and they're doing their own thing. But usually at that time when the parents are empty nesters, a lot of our clients aren't quite to retirement yet, and so there's still a need for life insurance to get the other person over the hump to retirement, if you will, right? So that's still a little bit of a need, but it's definitely less now that the kids aren't on payroll. And then this is our need. This is for when we get to retirement. So now this is you're financially independent. So now if there's a premature death for you or your spouse, there's not really a financial loss, right? And but the reason that this doesn't go down all the way down to zero at the back end of our plan is for two reasons, okay? The first is for long-term care needs, okay? So a lot of these life insurance policies, there's actually a very handful of companies that are actually offering this now. There's only one that we know of that actually offers a true long-term care policy, but what these life insurance companies are doing now is they actually allow you to get access to your death benefit before you die if you need it for any sort of long-term care or chronic illness, right? So that is a huge need that we're sorting out at the back end of the plan. And now that we can use life insurance to solve that instead of just a normal long-term care policy, which we're seeing those kind of go by the wayside now with a lot of our clients because so many people are needing that, right? That's a huge need that we're going to have in the back end of the plan that life insurance can solve for us now, right? Now, the other thing is legacy plans. So a lot of our clients like to pass on money or want to pass on money to the next generation. So life insurance is one of the most efficient ways to do it because it avoids having to go through probate court, and it's a tax-free transition to the next generation. So very seamless transition of wealth, which we can't say that with all assets that you're passing on to the kids, right? So those are kind of the needs that we have. So let's put some numbers behind that, okay? So usually at the peak, we take what's called an income replacement strategy. And so for a lot of our younger clients, it's easier to take an income replacement strategy as opposed to an actual replacement strategy, because a lot of times when our clients are in their early 30s, 40s, we don't know all the things that you're going to want to do with your money yet, right? If we knew, hey, we want to give, Joe 500,000, we want to give Jane, 500,000, we want to pay for this, pay off this house, and we want to give this much to this person, it'd be pretty easy, right? But a lot of times we don't know all those things yet. And so with an income replacement strategy, if we have 10 times your income, or if you're like a resident or fellow, if you haven't gone into practice yet, whatever your projected income is, if we go look at 10 times that, that will provide that level, that same level of income tax-free to your family for the next decade to decade and a half, or even more, depending on how that money is invested, okay? So that's how we want to look at it. So whatever the family was going to be doing with your income, they can keep doing it for the next 10 to 15 years, right? So that's how we want to look at that. So to put numbers behind it, if you're making, 300,000 in the future, we're going to want to see probably 3 million of death benefit in place, okay? And that's at the peak. So those are just some different things to be considering. But one of the other things that a lot of people don't think about is you actually have to show that you're healthy to get this, right? So they're not going to just offer life insurance to anyone. And so it's really important that we identify, why would somebody who is here, why would they even entertain getting life insurance? Because we already discussed that there's clearly not a need for someone to get life insurance here. However, the need may be to protect your insurability for the future, right? So we're not guaranteed, we don't want to presume upon the future that you're going to constantly stay healthy, right? I hope, that is the situation for you, but we see it all too often that maybe someone here, doesn't get the life insurance, but maybe they're not quite there yet, but maybe somewhere around here or somewhere around here, they have a health event. And so if those circles are different health events, when we get to here, almost everybody comes to us and says, hey, I need life insurance now, I got kids, I got dependents, I know that I need it. But if we had a health event anywhere along this up curve, that could potentially prohibit you from ever getting life insurance for your family. And so it just crushes my heart when we get to those situations where there's a clear need, but because we haven't gotten it in place already, some of these health events that have come up might either just make it exceptionally expensive for us at the top end, because the cost of the life insurance is directly related to how healthy you are, right? Not like all the insurances. You can fall into a different health category, and how healthy you are is how cheap your policy is, right? And so, but a lot of the times we may have some things like maybe an undiagnosed GI issue, or maybe you have something in your history, and you got to look at it through the lens of a life insurance company. Do they want to insure somebody with an undiagnosed issue, right? Or maybe they have something that's not minor, but maybe is now a diagnosis that you have that could predispose you for other things down the line that could cause an issue, right? So those are some other things that are really we got to be thoughtful of, so that might want us to look at getting insurance a little bit earlier before we're just here, right? So now that we kind of know the needs throughout the plan, I want to break down the two types of life insurance. So this can get out of hand, right? You can look at all these different types of policies, reading all these different things, but to simplify it, every single life insurance policy is going to fall into one of these two categories, okay? So it is either going to be a term policy, or it is going to be a permanent policy. So we call it term and perm, okay? So every life insurance is going to fall into one of those two categories, okay? So let's talk about term. Term is as simple as it gets. You protect a set period of time, or aka a term, and during that term, if you pass away, that death benefit goes to your beneficiary. Period, right? Not a lot of bells and whistles to these. And do you think that they're going to offer you a term policy if they think that you're going to die during that term? No, right? And so that's why they're really good at their jobs, right? And so like 99% of these term policies never pay out, not because it's a bad contract or anything, it's just because people outlive the term, right? And so that's a good thing. But we like that because it makes the cost of these terms really inexpensive in the scheme of things, right? So you could get, $3 million of coverage for like $150 a month or something like that, or even less, depending on how old you are and what your age is, right? That's the disparity between how much they would be giving you to how much you're paying is not even remotely close, right? So term are very great, but we really want to make sure that we can get the term to essentially get across the hump, if you will, right? So we want, we love that we can get that height of death benefit that we need when we have kids at home, but we don't need that same high level of coverage for the rest of your life, right? So it's just kind of a good temporary solution for us to get us to usually when kids are out of the house or off payroll, right? So, my wife and I, we just had our first, he's like, 8 months old now. And so we'll probably have, God willing, we'll have other kids in the future. And so I'd like to make sure that all of our kids can get to like their mid 20s, right? And so for us, we're looking at kind of like a 30-year term. And so you can get increments of 10, 20, or 30-year terms. So for us, we're looking at a 30-year term, but your situation might be a little bit different, right? Now, the other thing that we got to be thinking of with the term is it's just set during time. But when we get to the end of the term, it's done, right? So it's done. And so, a lot of times you may be able to renew it past that level time, but then your cost is going to go through the roof after that, right? So most people just cancel that at the end of the term. And so if you paid all that money for the 30 years and you're still living at the end of the 30 years, all of that money is gone to waste, right? And I hope that that's the situation for you, right? But we still, like we talked about, we still have a need at the back end of the plan, right? And so that's where the permanent insurance comes in. And so the permanent insurance, this is kind of, you can equate this to, almost like owning a home at a certain level, right? So if term is kind of like renting an apartment, this is like buying the house, okay? So these permanent policies are designed to be there for your entire life. And so a lot of clients, how it works is you build equity within the policy, and it can get to a point where that equity is large enough that we can actually not have to pay on it any further. So it's kind of like paying off the house, right? Once you pay off your mortgage, you don't have to pay that mortgage anymore. Same thing with the permanent coverages. So essentially, we'll maybe say, let's say we have a client that needs like a $500,000 policy that they want to pass on to their kids, or maybe use for any sort of chronic illness or long-term care, right? And not all contracts offer that, right? So you got to make sure that you're actually looking at the ones that do offer that for the long-term care stuff. But let's say we get a $500,000 policy, okay? So a client may be paying, just making numbers up, we'd see maybe somewhere like $250, $300 a month, maybe going from in their mid-30s to 65. We want that thing done. We don't want them paying on that passed into retirement. But then, we can design these so that it's guaranteed that if you make those premiums just until 65, then you don't have to make any more premiums for the rest of your life. And those can be guaranteed all the way out. We usually run them to guaranteed age 105. If you're feeling extra, healthy that day, we can run it out to 120 if you want, right? So that means that we just pay, that $250, $300 a month for that time frame essentially, and that till 65, and then that's just an asset that we get to add to your books that will either be used by you for long-term care or chronic illness needs, right? Or if you don't use it for that 500,000 is now passed on to the kids, right? So usually over that time, we see some of these contracts, if you're healthy, maybe you're putting in like $100,000 into that thing over that time frame, but we're getting a guaranteed $500,000 asset at the back end of our plan, right? So not everybody needs those, but a lot of times when we're seeing these, the needs on the back end of the plan for our clients that are in retirement, these are running, we really wish we would have started that a lot longer ago for a lot of our clients that are needing that on the back end, right? So there's a lot of other ways that you can design permanent life insurance as investment vehicles or other things like that, which this is not a conversation about that, right? This is just kind of textbook, how do we use term and permanent, right? So I think there's a lot of content online about how bad permanent insurance is. And it's not necessarily just a bad tool. It's just kind of like in medicine, there may be a drug that may be misused in the past with some patients, right, or abused, and that doesn't make the drug in and of itself a bad drug, right? It's just essentially that if it's not used in the right place, or if it's used outside of the realm of what we're actually designing it for, it could be a bad situation for clients, right? But when we're looking at this is kind of the basics, life insurance 101. How do we use term versus permanent? Term, set time frame. Permanent, we can have for legacy or chronic illness on the back end of the plan. It's really that simple. And so, that's where we really want to look at it. But again, don't forget that we do have to prove that you're insurable and that you're healthy to get it. And so if you are younger and maybe we're not quite here yet, I still would consider that, because you can even get some cheap term policies that are convertible into permanent policies. And so if you get a convertible term, then that means that you guarantee your ability whenever during the term to convert it into a policy that you can have for the rest of your life, to not have to go through the health strains of that. So that's kind of a good band-aid that we can use for some of our clients that maybe are on the upswing and we're not ready to get the permanent policy, or we don't, we want to make sure at least we can protect that we're going to be insurable to, if we're going to be the primary breadwinner of the family. Okay. So a lot of kind of the info on the life insurance, but hopefully it's helpful to just kind of see it visualized, to see what are the actual needs for life insurance, so you're not just wasting money on something that we don't know what the actual intent is, right? So again, hopefully this has been helpful for you, and look forward to seeing you in the next episode.